Hello, I've returned with another ADH Wealth solution. Today, we will begin to discuss fulfilling all of your financial needs. As always, this is a basic description. For an evaluation of your own, please schedule an appointment. My information is in the description. Lastly, make sure you hit the like, drop a comment, and if you're new, subscribe and hit the notification bell so you're made aware every time I release new content.
Yo, 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 yo. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall, and I've returned to Weapon Tap on Your Head with another ADH Wealth Solution article / attend cash mammy. So today, we're understanding the different types of permanent life insurance. A February 20th, 2020 article. Before we go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, you can contribute to channel growth by donating. You can schedule a one-on-one appointment with a licensed financial professional, or you can purchase life insurance directly up to $1 million with an instant decision and no medical exam. The links are in the description. So as we proceed to give you what you need, let's take a look here. It's an impressive sounding term, permanent life insurance. What is it exactly? How does it differ from other types of insurance? And does it make sense for your needs and goals? The first step in answering these questions is understanding the two most basic categories of life insurance: permanent life insurance and term life insurance. Permanent versus term, or as most people know, whole versus term. But you'll learn there's more than just whole. Both permanent life insurance policies and term life insurance policies offer protection through a death benefit, and the death benefit is typically paid out to the beneficiary tax-free. But term insurance is for defined periods of Because term life insurance only provides coverage for a limited period of time, it tends to be much more affordable. But depending on a potential policy owner's needs and the carrier, there can be important differences in the value between various term life insurance offerings. Permanent insurance and the different types. Unlike term insurance, permanent insurance policies offer a death benefit throughout the policy owner's life, provided the premiums are paid for a certain period. In addition, various types of permanent life insurance offer the opportunity to build up a cash value component over time. Policy owners can tap the cash value of a permanent life insurance policy for any reason: a down payment on a house, college tuition, or supplementing retirement income. The cash value grows on a tax-deferred basis. But beyond that, different types of permanent life insurance policies offer different features for areas like premium payment and cash accumulation. So one, which is what most people know about and your TV advisors like Dave Ramsey and Sue Zorman and Prime America always talk against, which is whole life insurance. This kind of permanent policy is probably the most straightforward in terms of having lifetime protection with a small amount of cash accumulation. The cash value grows based on a set interest rate guaranteed by the carrier. Premiums for whole life insurance policies can be set at a certain dollar amount for a certain payment period, depending on a policy owner's particular needs and resources. For instance, some policies can be paid up after 10 premium payments, while others can be acquired with a pay to age 100 premium schedule. So what this means is you can pay for 10 years like you would a 10-year term, but still after you're done paying that 10 years, it's a whole life policy, so it continues on. Additionally, unlike a term policy where once you're done paying that 10 years, year 11, you don't have any life insurance. With a whole life policy, you're done paying for 10 years, year 11 through till you die, you still have life insurance. Additionally, many whole life insurance policies are participating, which means they receive and pay dividends. Dividends can be used toward premium payments, to add to the cash value, or to increase the size of the death benefit of the insurance policy. Dividends are not guaranteed, and their payment typically depends on the operating results of the insurance carrier. For example, Mass Mutual has paid dividends on qualifying policies since 1869. So that means that life insurance has been making money and on the up and up through like the Great Depression when the stock market crashed, through the Great Recession when the stock market crashed. Life insurance was still paying dividends. Universal life insurance. Like whole life insurance, universal life insurance policies offer a death benefit coverage and the accumulation of cash value based on how much you pay in premiums. The premiums are generally flexible within certain limits. Once you've built up enough cash value in your policy to cover the cost of insurance and administrative charges, you can adjust your premium payment. That means you can pay more or less into your policy as your individual circumstances warrant. Why would a flexible premium payment be desirable? Well, some people pay the maximum premium possible into a policy for the first few years of coverage, building up the policy's cash value. That cash value can then be used to pay premiums if their income shrinks in retirement. I didn't see them post indexed universal, but I'm assuming that will be next. Variable universal life insurance. This is the kind of insurance that allows policy owners to put a policy's cash value into an investment account managed by the insurance company. The earnings from the account add to the cash value and may increase the size of the death benefit of the insurance policy. Insurance and other costs are paid from the account. However, the account could post a loss because it is tied to stock market performance. That, in turn, could affect the amount of funds available to pay for the underlying insurance protection and the size of the death benefit. These kinds of policies tend to appeal to those who want the opportunity to make possible investment gains with their insurance, along with the income tax advantages. Additionally, this kind of policy typically offers premium flexibility of universal policies. As a result, policy owners can have the opportunity to have greater cash value gains than offered in a whole life insurance policy. And they have the opportunity to adjust their premium payments in response to any ups or downs those market investments tend to produce. So, premiums could decrease when the policy's investments gain, or premiums could rise, or the death benefit shrink when those investments lose ground. Indexed universal life insurance. This type of insurance also offers investment options which are generally tied to the performance of a stock market index, generally the S&P 500, but gains and losses are capped at certain levels. This allows the policy owner an opportunity to take advantage of strong market performance up to a certain level. At the same time, the policy owner is somewhat protected in market downturns, unlike variable life insurance, which you aren't protected. Then you have survivorship insurance. This life insurance is a life insurance policy that covers two policy owners and pays off at the second death. It can be a whole life or other type of permanent life insurance policy and is generally designed for couples who only want to leave money to a beneficiary after they have both passed. Survivorship policies, for example, may be ideal for married couples with a special needs child or for business owners who wish to plan for an orderly transition of ownership to the next generation. Later in life, there are certain types of insurance, such as simplified issue whole life insurance and guaranteed acceptance life insurance, which is also whole life. Those are like the commercials you see with Alex Trebek or Colonial Penn. You can even get them from the AARP. These types of insurance are available for those in their later years looking to safeguard their loved one against unpaid bills and funeral costs. These options are aimed at those who can't get a more traditional policy, either because a pre-existing medical condition makes them ineligible or because their age would make a traditional policy's premiums prohibitively expensive. Such policies may offer limited benefits for a period of time. So what those are called is guaranteed issue or final expense. Those generally don't pay out your full death benefit for the first 2 years. They're usually capped at a maximum of $25,000, and generally they're only for people between 50 and 80, or in the state of New York, 50 to 75, and in some states between 45 and 85. But most states it's between 50 and 80 that you can qualify for those policies. Cost of the policy, but offers solutions for policy owners looking to address particular circumstances or protection needs. Think of it as aftermarket parts on a car, right? When you go buy your brand new Mercedes-Benz, well, then they also have, after you buy the Benz, they have special lights and the bumper guard and the mud flaps so you don't get types are more appropriate for some people than others, and consumers often turn to a financial professional to help sort through the options. But knowing the basics about the differences in different types of life insurance is a good first step in determining what might be right for you. So that's the article for today, ladies and gentlemen. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, you can contribute to channel growth by donating. You can schedule a one-on-one appointment with a licensed financial professional, or you can purchase life insurance directly up to $1 million with an instant decision and no medical exam. The links are in the description. With that being said, ladies and gentlemen, wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. Wipe ass. Work.
Interested in having an evaluation? Find my contact info in the description and schedule a consult to explore your options. Have a financial question but don't know who to ask? Email me at a.hall@cgwealth.financial and your question may be answered in my next video. Security products are subject to investment risks, including possible loss of principal. Before investing, carefully consider the investment objectives, risks, limitations, charges, and expenses of the product and any underlying investment options. This information can be found in the product and investment option prospectuses. Copies are available from your registered representative.